Welcome to the Stock Market Pulse midweek update. My name is Eric, and today is October 12th, 2016. We are a few minutes after the close. I'm going to put in a quick video today. We're going to focus on a couple things, mainly the S&P 500. We're going to look at the dollar, and we're going to talk about volatility a little bit. That's what we're about to cover. So first of all, I'm looking at the SPY, and I am on a daily chart. And just on the chart, I have a simple price channel envelope indicator here, and based on a 20 period price channel. And all that does is basically just place a line above at the 20-day high and a line below at the 20-day low. So you can see, obviously, we've been trading near the 20-day lows, and we're, kind of consolidating here. What I want to look at, though, is I want to look at this wedge that we've put in. This is what we talk to members about in our weekly Stock Market Pulse TV video on the website. And we were looking at this wedge, and we were comparing it to the US dollar. And the US dollar had broken out of the wedge, and we'll look at that in just a second, a couple days ago to the upside. And our prediction on Friday was that if that happens, or the strength in the dollar continues, that this is going to break to the downside, and that's kind of exactly what it did. So let's take a look at the dollar. I'm going to look at ticker UUP. You can see we had a similar sort of wedge pattern, and it broke out on the 4th. Okay, so and it continues to push higher. So until this relationship or inverse relationship changes, I do see more downside in the S&P. The one thing that the S&P, let's go back to the SPY. So remember the 4th, you can see here is the 4th on the SPY. So it took 3 or 4 days for it to finally follow the dollar, and it is coming into this level, which was the September low, and it is finding a little bit of support, but we are starting to consolidate underneath there. And previously, when the S&P, the levels are a little bit more clear, the S&P will find these levels, these lows, and sort of hit them and pierce below them, but a lot of time it bounces back. So the main question right now is the strength of the dollar. It's clearing its recent highs, and if the S&P follows the dollar, it's going to clear these recent lows. So what I want to do is drill down to a smaller time frame. Let's just go first to a 4-hour chart. A 4-hour chart basically puts in 2 candlesticks per day, and I like to use that for swing trading a lot. And you can see that yesterday we sort of sold off, and this was the afternoon yesterday. And today we're really just kind of continuing the consolidation. And today is Wednesday. If the bulls, I think if the bulls can't get back inside the wedge, by the end of the week, I think we're probably going to see more downside. At that point, if they did get back inside the wedge, then what I would do is basically remove the wedge altogether, and we'll just remove all the drawings. And then we'll just go, it basically turns this into more of a range, right? So, if you're buying into the wedge pattern with the dollar, which I am, I think that that we probably head lower, given that the dollar UUP again is clearing. Let's go back. It's well, let's go back to the daily chart so we can see. I think this is July. Yep, these are like the July highs. So if we go back to the SPY, if we look at the July lows, right, which is really back in this area too, so it's not as much lower, but that's the main thing that we're kind of following is this relationship. Now, again, we broke down out of that wedge, but we are at support. We're putting in a doji today, which is telling us that the market is unsure of what it wants to do. So I would be prepared. We started hedging with SDS. That's the way we're trading at. But we're also looking at some volatility. In our premium video from a week or so ago, we've been talking about UVXY. So we're up slightly in that. And this is more of a hedge trade where UVXY is the ProShares Ultra VIX short-term futures ETF. And there's different ways to play the VIX. You can play VXX. This is just one way. But basically, when this thing, we started, we went back to the 4-hour chart. We started legging into this a little bit as the S&P was coiling up, with the idea that if it finally breaks lower, UVXY could actually break higher. And that's kind of what it's starting to do. I'm basically, as a standalone trade, I'm basically around flat in this trade, which is fine because I'm hedged for that move lower, so that I can still hold on to some of my longs. But one thing that you can do over the next few days is, if you want to drill down to an hourly chart, and we're actually getting a sell signal here in the last hour of the day, and I use the DMI stochastic. You can email me about it if you want more information about that. But basically, if we start to really accelerate here and take out this low, then I think we're going to have some, we definitely have lower prices. And if we do just sort of a targets on a breakdown, I would take the move from 219 down to about 212. It's about 7 points. So if you break 212 minus 7, you're going to end up around 204, 205, maybe even all the way down. I think that's probably a little bit extreme, but we'll see. But so, we're on pins and needles here. We'll see if that wedge breaks down, and I would continue to watch the strength in the U.S. dollar. One thing I'm kind of looking at, and I don't like shorting things at the lows, but again, if we go back to this, the date of the 4th, right? This was the day the dollar broke out. Okay, so gold is also inverse to the dollar. So gold can actually be a proxy for stocks as well, and it is not recovering at all. So if the dollar continues to move higher, gold would likely go lower as well, and I would look for levels around 115, probably have some support down there. But again, over the next couple of days, we're really looking to see if the market can move back up inside that wedge that we broke down out of yesterday. Right, so kind of look like that. If we break back inside, then we're just going to have to play the waiting game. And we've been playing this waiting game for, look how many candlesticks. It's been a month. It seems like it's been forever. It's a little bit boring. And we're, basically taking short-term trades, nothing long-term right now until we get a clear direction. And, at this point, we're leaning bearish because of this wedge pattern. But again, we need some confirmation. We had a sell-off. We have a doji. We'd like to see some confirmation to the downside before really loading up on some short plays. So again, I'm looking at SDS, which is a 2 times inverse ETF of the SPY, or the S&P 500, and that's the way I'm playing shorting the market, and also UVXY. So I hope that helps. Our premium video will be released on Friday, so you guys should go to the website and check that out, stockmarketpulse.tv, and I'll talk to you then.